What's up, everyone? It's Ted back again with somebody's Wix. How's everybody day going? I, I don't know. Mine's going all right, I guess. Got into this maker situation, and so I thought I'd share a little bit. Um, and just talk about Maker and how it's really interesting. I mean, it's kind of similar to a lot of formations that a lot of crypto, especially the ones that have taken off since February, have made. This one's a little bit different, but it's interesting, and I'm interested to see what's gonna happen about it. And I was in a long earlier, but I got out. Made Yeah, I didn't make a whole lot, but I made a quick buck, and now I'll tell you the reason why I got out and didn't stay in. Um, I was in, like I said, I was in a long too. So, but again, we're coming at this from a smart money perspective. That means no retail theory here that we talk about on this channel. Um, if you're wondering what retail theory is, it's probably everything that you've been taught. If you talk about breaking out of a triangle or following a trend line, or, I mean, of course, I do believe in trends, there's that, but don't trade off a trend line, is what I'm trying to say. Or, believing that like the specific channel exists, or, harmonics, all these things, crossing EMAs, all these things are basically a distraction. Now, once you learn smart money, they can help you, because they basically, smart money is everything that you learned about retail and turn it upside down. So if you can use retail and then use it against its own logic, then you have smart money. Okay. So people are thinking that the price is going to go up because of these two EMAs are crossing at this point. Then you can probably prove the price is going to go down at that point because of something else. And that is pretty much smart money in a nutshell. And the fact that smart money is basically the charts follow an algorithm, and we are here to shine light on that algorithm, I guess you could say. There is an algorithm that is definitely embedded in these charts, and it's 100% seeable. I see it every day, and I try to prove it every day. Every time I put out a video, I do no retail theory. You'll never see a diagonal line on my chart. You'll just only see price points and boxes of either fair value gaps or breakers, or order blocks, or something that has to do with smart money. So if you're here to learn about anything retail wise, come to the wrong channel. But if you want to learn something new, take everything you've learned, put it off to the side for about 20 minutes, hopefully, and hopefully I can teach you something new. So, with that being said, let's go ahead and head on over to the charts here. And let's see. And there we go. Okay. And let me get my ugly mug off of here as well, so that way you can't see me. That way it could be a ghost. There we go. See, I just became a ghost. Isn't that cool? All right. Anyway, we're not going to get to this part just yet. I'm sure you're wondering what all this means. You see a box, and you see discount and breaker, and another box up here. all this stuff is fun and all, but we gotta get to that point. So first, we're gonna start with the monthly. That's where all this started, and not just a few short months ago. You know what? And now that it's beginning to be summertime, it's starting to feel like it's been quite some time. So here we have our first little sign. I wouldn't say sign, but first little oops, I moved that one and I wanted to move this one. There we go. First little smart money PDRA is what they're called, but I don't really know what else to call it other than an object. So this is your monthly fair value gap. You have right here that I have blocked out in between these three different bullish candles. One goes from the top of this wick to the bottom of this tail. So that means within this month there was all of this buying, and between the 2 months there was no selling, no try to balance. Basically it was all just one big large candle. And with smart money, you learn two things. Price tries to do two things and two things only. They seek out liquidity and it tries to balance. So this right here is already on my radar because it's the only monthly fair value gap that we have. Not the only one, well, yeah, pretty much the only one that hasn't been balanced, because before this, there wasn't much for Maker. So that's number one, and that's on the monthly, and we're already right here. And Maker's already made some huge moves. I mean, got to 6,000 at one point. This thing was on a roll. So if we go from monthly to weekly, all right, just keep breaking it down. And I didn't mean to move that. In fact, I probably need to lock that, because I locked it at the bottom of, I want to say it was one of the red candles on the monthly, but it came to this one on the weekly. So there's where I locked it. That was pretty much the bottom point. Now in the weekly fair value gap, we have this. So there is the weekly within the monthly, which I doubt it'll get down to here. But just to show you that there's another fair value gap in the system, and there's quite a few others too, but basically what fair value gaps are is that once they're created, especially as you can see from the monthly down to the weekly, they act as kind of magnets, because even on the second week, this one's, you can see this one came down, came back up, switched over to the next week, still came down, and I want to see if this one got lower. So let me look at the low here, 106.4765, and then actually no, it didn't. It stayed higher, but still, I got close. So see that they act pretty much like magnets. And once they get close or inside, it's almost like putting two opposite ends of the magnets together, and they blast away from each other usually. You know, most of the time, not all the time. So if I were to draw another one of these weekly, here, let me actually do it in the same color so we don't get confused. I got the magnet on, okay. All right, so as you can see, this one definitely got down in here, but we're on the weekly. You gotta think the daily, the 4 hour, the 1 hour. There's tons of those in here, you know, keeping it balanced. So it dumps down in here, but eventually it right here at the end, it pops right out. And of course, when it wants to come back down in, it does so, and it pops right back out. and here we are again. So this one weekly fair value gap, you could say, probably had some kind of influence on most of this area that's happening right now, right? You could call it support and resistance. You generally, I mean, it's a very, very wide area, but yes, they can act as kind of like a support and resistance. Not as much as a breaker can, which is what we're going to get to today, but they can act as support and resistance, that's for sure. So now that I've looked at what kind of formation this has kind of had, I always like to use Fibonacci's to kind of tell me where I am in the spectrum of the chart. Am I at a discount or am I at a premium? And if I'm at a discount, I'm more than likely to buy. Why? Because the prices are cheaper. And if you're smart money, if you have, if you're one of those institutions that just has tons of money to fly around, you can push the chart any kind of way. You want the prices to be cheaper. So you're more inclined to buy there as well. Now, there are times where you can buy at a premium, but those times are, generally on momentum or, there are certain circumstances. But as of right now, generally anything below the 61.8% is considered a discount. So right now we're below the discount, which is why I was in a long earlier. But the reason I got out was because of liquidity. Like I said, price always seeks liquidity. If you don't know what liquidity, especially in these kind of charts, is where you have your order sitting, right? So if you were to, and I've already got one set, so my liquidity is sitting there resting right now, whenever it comes down to it. But today, okay, for example, let's just get down to the 1 hour. That way I can just show you. All right, so today I'm watching Maker, and I am seeing this, right? I see it jump up. I see the pullback. I look in closer, right? And when I look in closer, I see this breaker. Now, what is a break? Well, I mean, don't know if I consider that yeah, I guess you could consider that a breaker. Because right here, this area, even though it goes all the way down to here, you have this high area here, and it came down to this low, came back up to this high, and now came all the way back down to this low. Right? So that's why I would consider this a breaker, because this area right here had a low point, and this area, the second area, had a lower point. So you'd have a low, a high, a lower low, right? And this is where I would consider my first low, considering we're in the hour. And if you just kind of look at the way it was moving, and it pulls down, up, and then back down, you kind of had this consolidation area right here that really didn't mean anything, and then just push back down. That's why I consider that a lower low compared to this one. So what is the breaker? The breaker is the highest bullish candle within that high. So you take that, you draw that out in the future, right? When the price comes back down to it, touches it, that's when you know you're gonna have your I guess your turnaround point or whatever. I mean, some people look at this and you could say, well, that's just simple resistance. Yeah, okay, I can give you that one. But the truth is, you'll find a lot of these that don't look like this, that are so completely obvious and that are breakers, and they trick you, but you gotta find them, so it's a give and take. So you gotta kind of have to understand the breaker. Like I said, this being the low and this being the lower low, nobody would ever have thought that. You would have thought down here would have been a lower low, and then up here being a higher low, therefore nullifying this as a breaker. All right, because that's not what a breaker is. Breaker is low, high, lower low. All right, so it did come in and of course touched the box, flew back out, and then I kept seeing my money going back and forth, and I'm going, why in the world is this thing not going all the way? Because I'm looking at this and I'm looking for another fair value gap for it to try to go to. And of course, there's one right above these guys, just above the high it just made. And I said, it's got to get above that at least. And then I'm thinking, up here, this probably would have been the safest bet. I'm on 5x margin, or sorry, 5x leverage. So I'm just trying to get there as fast as I can, get a quick buck, and move on to the next one. But that's when I started really looking at Maker as a whole, and I realized a lot of different things about it and why it's probably going to break lower. So as it was tinkering around and moving around, I was able to catch it. I think it was what was it, 25.58? Is that, yeah, I think it was like 25.58. Hold on, let me actually check my phone just to be real. It was on KuCoin, for you KuCoin people out there. Yeah, I don't really know where to find it. Either way, um, luckily I caught it at the top before it started moving down. And so, like I said, I started looking at Maker as a whole. And for one thing, for one of the reasons why I did jump in was because I saw this low right here get below this low. That was probably one of the first things I seen. I was looking at it probably at only this view. I didn't take a holistic view at it. I saw that this view, I said, okay, this low got lower than this low, therefore it swept liquidity. So that means all the buy limits that were sitting here, all the sell stops that were sitting here, it's triggered those, and it's done exactly as I always thought. Every time it comes to sweep liquidity, it's moved around a lot. That way people chase it. So it triggers, their sell limit, their buy limit, whatever it is. Usually their sell limits don't really go that far, and then it turns around and goes back against them. If they have a short stop loss, it knocks them out, or they realize, that maybe going the wrong way, so then they get out of the trade and they buy, and then it turns around and goes the other way. But then the buy limit people, same thing happens to them. They buy, it goes up, and then it doesn't get higher than this high, so then it goes down, and then they chase it, and whatever. There's a lot of money lost in this area, but there's also a lot of money gained in this area from all the smart money traders who know what's going on, that know that this is going to happen, that just put a buy limit on it, or actually buy and just let it ride because they know it swept liquidity. They know it's not getting any lower, and so they just let it go. So what once I started zooming out and I started looking at things and I saw it made this huge spike, I realized that on the daily it closed in a fair value gap. So here you go. Here's your daily fair value gap for this area right here. Here is the wick and the tail from those two. Pull that across. As you can see, when it was created, it came back up into it, came back up into it, and then boom, pushed away. So once it comes back up into it, fills it completely, boom, pushed away. Right? And that's when it made that breaker today. So even though, okay, so now I'm looking at this guy. So now we have more liquidity down here. So even though this took out this guy's liquidity, right, and kept moving up, it went through the fair value gap, balanced that part out, and it went above the discount, and so now we're in a premium. So to get out of the premium, to get back to the discount, boom, it pops it out. So now it wants to get to a better price, you could say. So it's seeking liquidity after it had balanced out by going through this daily fair value gap, and now it's seeking lower liquidity. And looking over here to the left, you see even more, right around almost the kind of same area. Almost, and if you've watched my video on synthetics, I kind of show you how to catch these. Probably almost each one of these was caused by an order block from one of the previous ones. So there was probably an order block in here. It could have been an hour, could have been a 15-minute order block in this little daily guy. Actually, hour. Actually, don't go down to the 15-minute. Only go down to the hour and try to find an order block, bullish order block. And more than likely, you're going to come up great with, some kind of, especially if this happens. So that's what I'm kind of doing with Maker right now. I'm looking at all this and I'm saying something is not, not right. There's a lot of liquidity just hanging out down around in this area. It could be this guy. Who knows? I mean, this looks like a really good, bullish order block right here. It's down underneath these guys, but then again, it could be a little bit too far down. I may have to dig into this whole area right here to find out exactly where it could actually drop to and then turn around. But even then, I'm still not convinced that it's gonna keep going up and make a new high. That could be just a good place to make a great trade, and take out a stop wherever you see a fair value gap or a bearish order block or something like that. Close my trade, maybe make a short after that. I don't know. But I do eventually think we will get down to this monthly fair value gap before we start seeing some very more bullish moments. So until then, I think Maker is going to be something to watch. That's for sure. Keep your eye on Maker. As you can see here, we do have a fair value gap here on the daily. one here on the daily. Now see, this one balanced. See how this wick comes up. Try to go it closer for you guys. So for this day, this guy's fine. This guy comes up here. This guy's tail comes down and touches this wick. So therefore this one's balanced. So you don't have to worry about any fair value gaps through here, which would make me think it could possibly be getting lower, seeking something through here. While it's coming down here, it could bounce off of something, create a breaker, and then break further down. Just a theory, you know. I mean, it already went through this fair value gap, and it's already been going down. Even after creating this breaker, that I was for sure was going to force it upwards. I didn't realize that on the daily, the fair value gap had already hit it and, you know, forced it down. No, it, like I said, it did hit the breaker, it did go up, but it didn't go up as much as I would like it to, as much as I thought it would have, as much as, you know, that fair value gap was there. It could have sucked into that fair value gap, and I would have been happy because that's what I was aiming for. And luckily I was paying attention, or else I probably would have gotten the negative, and I probably would have lost money on this. Because usually, especially when I think I'm right, I'll just set a, you know, and take profit and leave my phone there, walk away and do something else, and come back and check my phone and be like, oh, cool, yeah, I just want some money. But luckily I was actually interested in this one, and probably the reason I was really interested in this one is because I've actually never really looked at Maker before. I don't know why, but trading it, it's got some decent volume, so it makes for a decent trade. You know, it doesn't take too much of a premium up front, about as much as Ethereum, and so yeah. But like I said, watch the liquidity line right through here. This is basically, I mean, this is basically where I have a buy limit set. So that way, in case something happens, and it could be overnight, you know, it could be during the London session, we could see this thing go and just go right through it and come right back out, and you never know what's going to happen, just like this guy did. I mean, even though this took a day to do it, you know, it wasn't like, let's see how long it did take. Yeah, it took a while. So you'd still have time to try and catch it if you were awake, and you would have, because it would have happened somewhere around 7, 8 in the morning. So, well, that's Eastern time. If for you Californians, that would have been pretty early for you. So, but still, it hung down there for like, what, a couple hours? Oh yeah, you could have, everybody could have easily gotten it on that one. So, but that's what I'm saying, is that especially this, now that you're looking at it on the hour, why was it down here for this many hours and not doing anything? It didn't even cross the path of these guys, of this guy right here. It didn't even get lower than that. That's because this probably caused the order block that it's in and pushed it back up the other way. So let me see if I can't get any closer into this guy. and see where the fair value gap was. It started right here. So, and actually, I don't even know if I consider that a fair value gap. Not a fair value gap, sorry, a bullish order block. Because a bullish order block would have to have more bullish momentum coming out of it than there would be bearish. And here it just kind of goes sideways until here, and then it finally shoots up. So this one's an odd one. But still, even if here, if we do want to say, hey, this was some kind of weird, odd bullish order block, and here's what started the momentum, you'd have to look all the way back here, and it would be this red candle. That would be the start of the bullish order block. Oops, didn't mean to hit that. I just want to see where it comes down and hits. It comes right into the middle of it. Interesting. But as you can see, that line also acted as liquidity for quite some time. Look, you can see it right here, all of that. It's just, there's just liquidity just waiting underneath here, waiting to be taken. So it came down into it, took it, but didn't take all of it because it left some behind. And then it turned around and took off. And now these guys came very close not too long ago, right? Just this past couple weeks. So, therefore, I may be shorting maker, depending on what this breaker is gonna do. See? You know what I'm saying? Look at it. Look at this breaker. I just touched it again and bounced off. So, anyways, that's enough for me tonight. That was a good 30-minute video. Usually mine turn into about 45 minutes and I keep on rambling about nothing, but I hope you learned something from this video, and if you did, I would like you to do something for me, and that would be to hit that subscribe button, hit that like button, hit that notification button, let people know, something about smart money. Start looking into it at least. It's going to be the thing that saves you. It's going to be the thing that keeps you from losing $6,000 one day because you thought you had this perfect trade and you thought you had this perfect trading model all figured out. And then everything turned around and snapped against you. And because the indicators are all just there to keep you focused on something else rather than understanding what's actually happening on the charts. And what's actually happening on the charts is, where is price going to be released into the liquidity pool, right? Where is that going to happen? That's what you always have to look at. And that's what I'm looking at now, is that line I looked at, is underneath all of that. That can't just be some kind of coincidence. There's a reason for that. The smart money people left that there. They're going to come down there and they're going to grab that. Well, for one, it's cheap. It's cheaper than the rest of the most prices that you can get maker at now. And number two, that's what the market seeks. It seeks liquidity. It'll be at a discount price. So Anyways, that's all I got for tonight. Thank you for watching, and if I don't recall, I think I remember that you should all remember to wear your pants.